Okay, good evening students. Already in my previous PPT, I explained up to the concept of receipts and payments account. I have explained. Okay, so receipts and payment account. So I already told that I will be going to the concept of the income and expenditure account. Okay, so today I am going to teach the concept of income and expenditure account. Before that, I have to keep the receipts and payment, then only it will be easy to explain the concept of income and expenditure account. So I will be recalling the receipts and payment account. So receipts and payment account structure I have already given to you. The receipts and payment account, it starts with the what? Opening balance. It starts with the opening balance. You can say brought down. Always the opening balance is brought down. So I already explained about the differences between cash book and receipts and payment account. So cash book is having two separate columns like cash column and bank column. But the receipts and payment does not distinguish the cash and bank. It mixed together and records. That's why cash balance plus bank balance together we have to record it as a opening balance. Okay. After the opening balance, I already told that there are two types of receipts. One is capital receipt, another one is the revenue receipt. So capital receipt I have explained already, even then I am telling once again. Capital receipt means the receipt which will be kept by the organization, the receipt which will be kept by the organization, and it will be used for a long period of time. Like for example, donation for building. I think you may be remembering that. Donation for building, so that will be kept by the business for a long period of time till the building is constructed. That's why that type of receipt is called as the capital receipt. That receipt is called as capital receipt. Okay. So there are so many examples. I have told only one example. Already I have discussed this one in the receipts and payment account. You can recall that. Then next one is called as the revenue receipt. Revenue receipt means the receipt which we receive, the organization received, the not-for-profit organization receive frequently, recurrently, in a day-to-day basis. Every year it keeps on being received. So that receipt is called as the revenue receipt. Revenue receipt. Okay. So the receipts and payment does not distinguish the receipt whether it is a capital receipt or whether it is a revenue receipt. It is like a blind. It is just closing the eyes. If the money comes, it will be recording. So whether it is a capital receipt or whether it is a revenue receipt, it never distinguishes. That's why all capital receipt will be recorded, all revenue receipt will be recorded. So like that, come to the payment side. So receipt side is over. Payment side, like capital receipt and revenue receipt, capital payment. That means money is going out. Here money comes in, here money goes out. So capital payments. Capital payments, I can give a very good example. But the meaning is capital payment means the payment we are making and we are getting certain things, that the usage of that particular asset will be for more long period. For example, purchasing the furniture. You are buying the furniture. So furniture will be kept in the organization for a long period of time. For that, if you pay any money, that money payment is called as the capital payment. Purchase of building, purchase of furniture, purchase of equipment in hospitals, etc., etc. Sports club, purchase of sports material, all will be kept for a long period of time. That's called the capital payment. Then next one is the revenue payment. So revenue payment. Revenue payment means the payment which we incurs frequently, like paying salary to the workers, Okay, paying rent to the building, paying any sort of day-to-day expenses. So which is recurring again and again, that is called as the revenue payments. So beside opening balance and then the capital receipt, then revenue receipt, then beside capital payment and revenue payment. This will be all the money will be received. Here all the money will be going out. So 10 lakhs we are receiving, 7 lakhs it is going out. Mean what will be the remaining? Remaining will be a closing balance. Remaining will be the closing balance. It will be a mixture of cash and bank, as I have already told that. So this is the structure of receipts and payment account. This I am repeating. I have already told you, just I am repeating because I am going to explain the concept of income and expenditure account. Okay. Now I come to the concept of income and expenditure account. This income and expenditure account is being prepared from the receipts and payment accounts. That's why I keep the receipts and payment, then I am going to the income and expenditure account. Okay. So here, before I am explaining about how to prepare, I will be giving some concept about the income and expenditure account. Here I have written important concept of income and expenditure is first one, nature. What is the nature of receipts and payment account? Nature of receipts and payment account is the real account. Real account means debit what comes in, credit what goes out. If money comes in, debit, money goes out, credit. But the nature of income and expenditure account is nominal account. Nominal account means debit all expenses and losses. Credit all income and gain, that we have studied in class 11. The golden rules of accounting. So, nominal account nature it is having. It is having the real account nature. This is having the nominal account nature. And the second concept is it is prepared on the basis of accrual basis. So, very, very important one. This is not new one for you. Even class 11th, while we were preparing the financial statements, while we were preparing the profit and loss account, you may be remembering that. Suppose we are paying salary to our employees 10,000 rupees. Every year we have to pay 3,000 rupees salary to the employees. So every year means 1 month is 3,000. 1 month salary is 3,000. For example, 1 month salary is 3,000 rupees. So 12 month salary is 36,000 rupees we have to pay. But we have paid only 30,000 rupees. Okay, we have paid 30,000, we have to pay still 6,000. Clear? So this 30,000 is the money which has gone out. 6,000 is the this year expenses, but we have not paid. So expenses which we have not paid is called as the outstanding expenses. So I will ask you the question, salary paid is 30,000, to be paid is 6,000, so total is 36,000. Now I will ask the question, should I record 30,000 or 36,000? That's the question. So the salary paid will be recorded as 30,000 and also the salary paid already we can take from the revenue payment. From here only we are going to take, that I will tell you later on. Yes, salary paid 30,000 will be recorded and also 6,000 to be payable also to be recorded. So some may be asking again, sir, 6,000 we have not paid, why are you recording? That is called the accrual basis. Whether we have paid or not, if the expenses are belonging to the particular year, it has to be recorded as an expense. Then only we will be getting the exact amount of profit making organization profit we will be getting. Here the word profit we should not use. Surplus or deficit, that will be coming later on. So basis is an accrual basis. Accrual basis means the expenses which have been paid are to be paid to be recorded. The income which has been received are to be received also to be recorded. That is called the accrual basis. In class 11th I told many times, that's why I am repeating that one, nothing else. So income and expenditure account. Second one is basis. And the third one is accounting period. You see, receipts and payment account, is a blind, I told. Just for understanding purpose, I told blind. Why it is a blind? Suppose a blind is closing the eyes, it will be receiving the money. When it is receiving the money, it cannot see this money is belonging to previous year or current year or next year. So previous year money it will be received, current year money it will be received, next year money it will be receiving. So it is like a mixture. Money received means it will be recorded. But income and expenditure is an intelligent one. How it is an intelligent one? It is a mixture. 1 lakh rupees we have received. All the 1 lakh income we won't record it. So in 1 lakh, out of that 1 lakh income, we will find out how much income belonging to the current year. How much income belonging to the current year, that I will be explaining, demonstrating I will be doing. So here I am explaining the concept that accounting period. This will be recording, suppose this is the 2018. It means 17-18. So 17-18 income it will be recording. 16-17 it will be recording. 18-19 it will be recording. But here it will be recording only 17-18 income will be recorded. 17-18 expenditure only will be recorded. That's called the accounting period. The current accounting period only will be recorded. Then receipts and payment is having opening balance and closing balance, but the income and expenditure having no opening balance. There is no opening balance. Opening balance will not be there. So you can recall that income and expenditure is almost like profit and loss account what we have prepared in the last year. So profit and loss account, did we record any opening balance? No. Like that, income and expenditure also will not have any opening balance, but you can ask the question, closing balance will be there or not? Of course, here there will be a total expenditure, here there will be a total income. So this will be 5 lakh, this will be 4 lakh. So 1 lakh is the excess, that 1 lakh balance will be there. That 1 lakh balance, generally we say that it's a profit, but this I am teaching in the not-for-profit organization. That's why we have to use the word surplus. If income is more, 5 lakh, expenditure is less, 4 lakh, 1 lakh is a surplus. If expenditure is 5 lakh, income is 4 lakh, the difference is deficit. So we should not use the word profit or loss. Instead, we have to use the word surplus or deficit. Okay. That's why next, there is no opening balance and closing balance may be a surplus, may be a deficit. Okay. Now adjustment. In receipts and payment, no adjustment will be there because it is prepared on the basis of cash basis. It is prepared on the basis of cash. Cash comes in, it will be recorded. Cash goes out, it will be recorded here. But here, this is prepared on the accrual basis. That's why it is our duty to do the adjustment. That means outstanding expenses, prepaid expenses, this and all we have to adjust this. That's why the adjustments will be there. Then non-cash item like depreciation. Depreciation will not be recorded here. Why? Because depreciation, 1 lakh asset we purchased. After 1 year, the asset value will be reduced to 90,000. 10,000 is an expenses. But 10,000 is an expenses, but the 10,000 we have not given to anybody. The money has not gone. That is why that is a transaction which is not resulting any cash outflow. That's why it will not be taking place in the receipts and payment account, but it will be taking place in the expenditure account. Okay. So with this concept, now I am going to explain. Now you listen very carefully. You will be easily understanding. Now you see, first one is the opening balance of cash and bank. So I told that income and expenditure we prepare from the receipts and payment. So whatever the items here, this will be recorded here, but not like 100% it will be recorded. This is an intelligent, it will see what items to be recorded, what items should not be recorded. Be very careful. First, opening balance of cash and bank. This cash and bank is what? It is an expenses or asset or income. Means cash and bank, anybody if you ask if you have a cash, that is an asset. So the asset is not taking place in the income and expenditure account. Then you can ask a question that where it will go. This is the cash and bank balance will be recorded in the balance sheet. Balance sheet means not in the closing balance sheet. It is the opening balance sheet. Last year balance sheet, asset side, this cash and bank balance has to be recorded. Then you may be asking one question, sir, last year balance sheet also we have to prepare, sir. It means, yes, you must know the concept of preparing the last year balance sheet. Of course, in the board examination, they will be asking 98% of the problem. You can see 10 years question. Only they are asking to prepare the income and expenditure account only. But it doesn't mean that you should no need to have a knowledge of balance sheet. Balance sheet knowledge also you should have. At present, leave it. Later on we will discuss. So this opening balance of cash and bank will not be coming to the income and expenditure account because this is the asset. Asset will never come in either it is an income nor it is an expenditure. It is an asset, that's why this item will not come. Then next item is the capital receipt. This capital receipt, we are receiving the money and we keeping in the organization and we'll be using it for long period of time. It means that organization is having the liability. That money we should not spend for within 1 year. We have to keep it for long period. That is why that will be categorized as liability. All capital receipt should be a liability. That's why this also will not take place in the income and expenditure account. So this will not be coming, this will not. This is given in the problem, this you have to prepare in the board examination. So this both will not take place here. Then finally what it will come? It means all revenue receipt will be recorded in the income. So revenue receipt, there will be plenty of receipt. I will be telling one example, maybe a subscription. Subscription means the amount which is being received by the organization every year from the members. Members have to pay the subscription. Suppose the subscription amount here it is 1 lakh. So this subscription I will be recording here. This is one of the revenue receipt. There will be so many revenue receipts. I am giving one sample, one example I am writing. This subscription 1 lakh I am recording. But I am not recording in the outer column. I am recording in the inner column. Here there is no inner column. Why in inner column means the subscription 1 lakh may be included. Last year subscription may be included. Next year subscription may be included. This year subscription may be included. So we have to remove the last year and the next year subscription. For example, this 1 lakh is having the subscription for the previous year. What is the current year? 17, 18 is the current year. For example, subscription for 16, 17. This is the previous year. This is the previous year subscription, maybe 10,000 included means this is not the income for the current year. The person last year is supposed to give, but he is giving late. So he is giving this year. So that money, but this is a blind, it has received. But when we are preparing income and expenditure account, this 1 lakh, out of this 1 lakh, 10,000 rupees is belonging to the last year subscription that we have received this year. That's why we have to remove this 10,000, balance 90,000. And next, sometime this is the current year, previous year is 16, 17. So next year is 18, 19. 18, 19 subscription, sometime they may be over smart. Some members will be giving the subscription in advance. If they have given advance, you have to subtract that also. Subscription for 18, 19. So 18, 19 for the next year. Next year subscription maybe 15,000 you would have received. That has to be subtracted. So ultimately 75,000. Okay. Next, this year's subscription, some members are defaulters. They have not paid. So if they have not paid, it will not show, because this not received means this 1 lakh, in the 1 lakh that money is not included. So that subscription money we have not received For example, 40,000 rupees, still we have not received. Some members have not given the subscription. But that 40,000, though we have not received, but the subscription is belonging to which year? The subscription is belonging to current year. So according to accrual basis, the income received, to be received, has to be included. That's why even though the 40,000 we have not received, it has to be added. That is for outstanding. This means the subscription yet to be received. That is called as the outstanding subscription for the current year. 40,000 we have to add. So total will be 1,15,000 rupees we have to record it. Okay. So some more adjustment what it may come is, sometimes this current year subscription we would have received last year. So last year you would have received mean that is belonging to which year? Current year. So last year we would have received mean last year receipts and payment account would have been recorded. But that is belonging to which year? Current year. That is why last year subscription received advance to be added. This year subscription received in advance is belonging to the next year. That is why that money has to be subtracted. Like that, we have to add the items, and some item we have to subtract some item. Don't think that all adjustment will be coming in the examination. If adjustment is there, you have to do an adjustment. Okay, but you should know what are all the items we are supposed to add, what are all the items we are supposed to subtract. Okay, this after adjusting, we will come to know what is exactly the money income for the current year. That's called the accrual basis. This is the exact income for the current year. So this all the revenue receipt will be recorded. Like that here, capital. Now this side is over. Now come to this side. This left hand side will go to the right hand side. This right hand side will come to the left hand side. This is not like a memorized. I am not saying that. This is prepared on the basis of real account. So left hand side will be receipt, debit what comes in, credit what goes out. But here it is prepared on the basis of the nominal account. Left hand side the expenses, right hand side the income. That is why it's coming like this. That's why automatically this revenue receipt will be going as an income. The revenue payment will be going as an expense. So this capital payment will not be coming, will not take any role in the income and expenditure account. The reason is capital payment means what I have told, purchase of building, purchase of furniture. All these things we are buying and keeping in the business, and it will be used for many years. So that is nothing but an asset. So that will be going to a balance sheet. It will be going to a balance sheet. Balance sheet of this year closing period. Okay, this year it will be going. Again, the preparation of the balance sheet is a question that at the time of demonstrating the problem, you will understand further. Now you concentrate only on the income and expenditure account. The balance sheet items you don't worry. Okay, this item will go to the balance sheet. But what item will come to this income and expenditure is the revenue payment will be coming. Revenue payment. Like that I can give an example. Revenue payment means salary paid to the employee. Salary paid to the employee means it will be an amount, whatever we paid, it will be recorded in the inner column. Like we have adjusted here also we have to do an adjustment. The salary which we have paid for last year's salary we may paid this year. So last year's salary we paid means this year is 17-18. Last year's salary is 16-17. We have to subtract. Then next year's salary we may pay in advance sometime. That also we have to subtract. Next year is, current year is 17-18. Next year is 18-19. That also we have to subtract. And this year's salary we have not paid. We have not paid means it will not be recorded in the here. In the payment side we wouldn't have recorded. But as we have not paid, even then we have to record. Why? Again, I am recording the concept of accrual basis. Whether you have not paid, but it is belonging to the current year, it has to be added. That is called current year subscription. It's called current year subscription outstanding. We have to add. Like that, we have to make an adjustment, and finally, this income and expenses will be subtracted. If this side is more, this side is less, the balance will be coming here. That will be a surplus. Okay, this side is more, this side coming, that will be a deficit. Okay, so either one only will be coming. So let us assume that surplus has come in. This is the thing you have to find out in the examination, what is the surplus or income. The surplus, otherwise it is called the excess of income over expenditure. If it is a deficit, other name is excess of expenditure over income. So that is analogy. It is otherwise called as like that only. And this revenue receipt is coming, this revenue payment is coming. But the closing balance of cash and bank will not coming in the this side, because this is an asset. This is an asset, means it will be going to where? It will be going to a balance sheet only. So the balance sheet asset side will be recorded. So that is which balance sheet? Closing balance sheet. Closing balance sheet, asset side it will be recorded. This all capital payments like purchase of furniture, purchase of land, purchase of building also will be going to the closing balance sheet, asset side. Only this opening cash and opening bank balance will be going in the opening balance sheet, asset side. Now, balance, where it will be going, I am telling. Regarding the balance sheet, at the time of demonstration, I will be explaining. Now, you concentrate this one, income and expenditure account. So, after recording this item, sir, this much only will be coming or not, any other item will come or not, means along with that item, two important items will come, like a non-cash item, depreciation. I told we recorded in the profit and loss account in the last year, depreciation of furniture, depreciation of equipment. We recorded or not? The same way, this is almost like a profit and loss account. Only difference is we don't use the word profit and loss. We use the word surplus and deficit. Otherwise, the same concept. It is not a new one. Only topic is different, the title is different. Whatever we studied in the 11th, the same concept is applicable. It is almost like a profit and loss account only. So here, depreciation we have to record, no need to forget. Depreciation. Depreciation means you are buying one asset, after 1 year that value will get down. So 1 lakh asset will be getting down to 85,000. So 15,000 you have consumed, you have used. The 15,000 is an expense. That expense we have to record it. But that item we cannot find from this, because that is a non-cash item. We are not giving money to anybody. While you are not giving money to anybody, this payment side it won't reflect. That's why this depreciation don't depend from the reception payment account. You have to depend from the adjustment.